really about the global setup right now. And globally, it is really the reverse concern which is now coming back, which is that, okay, is inflation coming back? Will economies get stimulated? And bond yields are spiking. Nobody saw this kind of an, let me put it this way, right? Exactly 8 weeks ago, the concern in the market was slowdown and rise in inflation because of a tariff interplay. Now, the wrinkle, I won't use the word concern, I think it's a wrinkle, but if it goes up, it will become a concern. The concern in the market is stimulus coming back by Japan and by US, and that will inflate the economy, and that automatically will have an impact on the medium term inflation target, which is clearly having an impact on the trade setup, especially the bond market. So the 10-year paper, the 2-year paper, and the 5-year paper, they're not dangerously high, but they're telling you that you need to be a bit watchful. Now, that's one element. Second element is that typically when yields go higher, it tends to have impact on flows. But for yields to go higher, the dollar index has to also go higher. So for our viewers who got up this morning and they've got all the news on where the bond yields are moving, how that will impact your portfolio, I would say that it is not a case for reversal for India yet, but yes, the movement in the bond yield clearly is indicating that we could be in for slightly unpredictable kind of a global equity terrain. So a lot of news now will suddenly move away from tariff to the implications of bond yields and what it could actually impact. So I'm not saying that you're sitting now on a powder keg or something, but you just got to be careful now, simply because for next couple of days this bond yield is going to be troubling you. It's like this yellow light, it may go back to green, but green is definitely out. Red was when tariff happened, it became green after tariff got over. Yellow is telling you again that, guys, that comfy easy money which was being made from that fair trade to normalization trade from April to May or from March to April, I think that honeymoon is over. It's back to reality now.
Yeah, absolutely. The Japanese manufacturing as well has shrunk for an 11th straight month, which is why Asia as well is pretty much, picking up the cues from Wall Street overnight. Look at Japan, it's down about almost 300 points right now. Hong Kong as well has slid about 0.5%, and Shanghai is lying flat but with a negative bias. For our markets then, and for our markets too, the flip-flop really continues. While the Nifty managed to snap its 3 session of losses, SMIDs managed to do a lot better. They were relatively higher, and you did have a positive breath at your hand. But again, the question is that amber light, what should your portfolio strategy be? Should you be looking at profit taking? Because it's really been a 1 month of, like you said, from fear to almost getting to greed zones, and we were almost close to that all-time high. What should investors be doing now?
So, I should just think about it. After that big move we saw last week, we've not seen a drop, but we've not seen a sizable uptrend also. So let's really purely talk in language of Nifty. 25,500, 25,200. You've not gone below that glass ceiling yet, and despite the fact that you had good flows yesterday and poor flows on on Tuesday. So the market is running into what could be called as a near-term technical resistance if you view the market from the Nifty standpoint. Mid and small cap stocks, of course, when the concerns in the world are fading away, the catch-up trade, I think, in mid and small cap stock, I think, continues, and that momentum is here to stay. Third interplay is that we're in the last leg of earnings season. We'll discuss some numbers. I mean, IndusInd Bank, kya hai ye? Nothing short of a howler. We'll discuss that. So earnings season has really not been great, so to speak. So the approach in this market really is that if you bought into stocks in the month of April, and if you have a short-term time horizon, which is next 2 to 3 months, the short-term trading profits should be locked up. In the medium term, there are a lot of pockets which are opening up now where the sectoral rotation is on. For example, cement. For example, what is happening in the entire metal space. For example, what is happening in some of the niche consumer stocks. So you have to focus on the rotation part. And then the long term, where I think, nothing changes, frankly. if you have a 3+ year time frame.
Yeah, and let's now talk about numbers. While Interglobe Aviation has once again been a beat on all counts, that said, the big howler really, like Nikunj described, has been from IndusInd Bank, wherein their core profitability has been muted. Other than that, there have been several one-offs, and which are leading to this 22 billion rupees of losses that they've incurred. More importantly, on what the leadership is going to be like henceforth. And the chairman did mention that the RBI has asked for an MD and CEO candidate, the names, the preferred list of names by 20th of June. So I think that is going to be the next event now for IndusInd Bank. But yeah, I mean, if you just were to look at what the numbers were, it's really been a quarter to forget.
Okay, markets would say we knew that the forex loss was coming and that has been quantified, but there's an additional write-off.
Yeah.
From where that has come, and that is something which is difficult to reconcile, which means that apart from this forex issue, what we know and which is in the public domain, which has impacted the market per se, there is an additional provisioning which has happened, which is hard to reconcile, which means that even in the other operating businesses also, especially the MFI business, the stress is not over. Then this whole vacuum continues. Who will be the next CEO? Who will come? What would be the impact of that in terms of near-term team and in what shape the building would take? Will IndusInd Bank go very conservative in FY26 simply because they will now have to maintain what could be called as a very cautious view? So it's a stock where I would say that just because it has fallen and it may be cheap, looking at the relative valuations, I think it is still not a buy. I think markets would really wait for lot of clarity to emerge. First, clarity on this next CEO, then clarity on which way the business dynamics are really going to move. What is the shape of the book? What will happen to the lending activity? And those are big unanswered questions. And I always say that in market, you cannot just bet. It is, especially when it comes to financials, it is better to play seen rather than playing blind. In the financial space, there are a lot of good banks where NPAs are better, management comfort is there, and valuations are not stretched. So I think IndusInd Bank should be avoided, and one is better off not really trying to buy that dip also today.
Okay, let's throw light on what